Senator Bernie Sanders and Congresswoman Alexandria Ocasio-Cortez introduced a bill they have named the Loan Shark Prevention Act. The bill would put into place a 15% interest rate limit on credit cards. And it's all voter pandering and virtue signaling at its finest. So what's the reasoning to this so-called Loan Shark Prevention Act?
So right now you're looking at a median credit card interest rate now of over 21%. That means half of the American people are actually paying more than that.
And in a Medium.com article, Sanders gets more specific. The median credit card interest rate today for consumers is an astounding 21.36%. However, Senator Sanders isn't showing you the whole picture. Big surprise. What Bernie isn't telling you is that the 21.36% he mentioned is the average median APR on new credit card offers. And many of those cards are rewards cards, which generally come with a higher interest rate. What he's also neglecting to tell you is that the overall average credit card interest rate in the United States is 17.73%. But 21.36% is higher than 17.73%. Bigger numbers are more dramatic, I guess. That is, unless you're objectively reporting a story, of course. When credit card companies charge over 20% interest on credit cards, they are not engaged in the business of making credit available. They are involved in extortion and loan sharking. That's not how extortion and loan sharking works, Bernie.
But you got all these guys in their three-piece suits who are now the new loan shark hoodlums that we used to see in the movies. You know, we used to see in the movies the guys, I'll break your kneecap if you don't pay back. Well, I don't know that they break kneecaps.
But now they'll take your home.
Now, that's right. Maybe do something even worse. Or maybe pull the plug on your mom who needs medical treatment.
Holy shit! And Democrats accuse Republicans of fear-mongering. Look, no one is forcing you to apply for a credit card. You either get to accept or not accept the terms of service before you sign anything.
And this is an issue that impacts zillions of people all over this country.
The way Bernie Sanders talks, it's as if everyone who owns a credit card is not only suffering, but also being ripped off. According to the Federal Reserve, 57.5% of Americans who use credit cards don't carry a balance, which means that they pay them off quickly and are basically using the card for convenience and rewards, like cash back on purchases and airline miles.
With Quicksilver from Capital One, you're earning unlimited 1.5% cash back on every purchase everywhere.
Earn 1.5% cash back on everything you buy with Freedom Unlimited.
The Discover It Miles card. Earn unlimited 1.5 miles on every purchase. Plus, we'll match your miles at the end of your first year.
With the Capital One Venture card, you earn unlimited double miles on every purchase every day.
Annual fees and higher interest rates allow credit card companies to be competitive and be able to afford and give their customers the perks and rewards that they crave. Plus, those higher rates give credit card companies a buffer, because when the economy takes a hit, credit card defaults dramatically rise. And when that happens, financial institutions take a bath. Now, one of two things will happen if the Loan Shark Prevention Act is signed into law. A, credit card companies would just give cards to anybody that wants one. Giving high-risk loans to everyone who has questionable credit and can't afford payments? What could possibly go wrong? Or B, credit card companies will stop extending credit to higher-risk consumers. So instead of getting a card with a high interest rate, you might not be able to get one at all. And what happens if they can't get a credit card? What will people do if they have an emergency expense, like say a car breaking down or an unexpected home repair? Those people might end up turning to payday loans. An average payday loan is $100 to $1,000 and is meant to be paid back within 2 weeks. And since these loans usually come with an annual percentage rate of 400% or more, you pay $15.38 in interest for every $100 you borrow. But depending on your credit and the loan provider, you could pay as much as $30 or more for every $100 loaned. According to the Consumer Financial Protection Bureau, borrowers default on 1 in 5 payday loans. But with an average APR of 400% under the Loan Shark Prevention Act, those super high interest rates would be illegal, which means the eradication of the payday loan industry. Now, am I about to defend payday loan companies? Yes and no. On one hand, paying 15 to 30% interest on a 2-week loan is insane. I would absolutely advise against doing this. For clarity, do not ever do this. But on the other hand, there are people who genuinely need to use the service. And if it were not to exist anymore, people would just turn to other means to borrow money. Legal ones like pawn shops, and not so legal ones, like actual loan sharks. Not to mention that when people get desperate, they can turn to criminal acts like robbery and burglary. But in the meantime, payday loans do exist, and Senator Sanders doesn't like them. Sanders states there are 63 million adults in this country who are either unbanked or underbanked, disproportionately African American and Hispanic. These low-income Americans live in communities that do not have regular banking services and are forced to depend on predatory payday lenders and check cashing outfits. So if you don't have access to regular banking services, then how are you getting payday loans? Because to get a payday loan, one of the requirements is to have an open and active checking account. So Bernie has no idea what the heck he's talking about. But neither does Ocasio-Cortez.
Now, with a lot of these corporate checking accounts, what happens is that you need to keep a minimum of, say, $1,500 in your bank account for all 30 days of the month so that you don't get charged $25 for them to have the privilege of holding your money.
Gee, it's so unfair that banks charge you to use their services. Also, if you think that a minimum balance of $1,500 is too high for you and that a $25 a month fee is pricey, go to another bank. Like this one that will waive their monthly fee if you maintain a $100 daily balance. And if not, you pay a $15 monthly maintenance fee.
We're talking about even if you try to avoid that charge and you take your check to a check cashing place, which is very common here in my community. You take it to a check cashing place, they're charging you 10% just for the
10%.
privilege. Sometimes 10%.
To cash a check.
To cash a check.
That is straight up bullshit. To clarify, Ocasio-Cortez is claiming that a check cashing place right here in New York City charges as much as 10% to cash a check. However, pursuant to New York state banking law, check cashing places can only charge a maximum of 2.11% on any check cashed.
And it's funny because you would think that in a densely populated community like the Bronx or like Jackson Heights that you'd be able to have a bank on every corner.
So on one hand, banks are ripping off consumers with high fees. But on the other hand, she's concerned that there aren't more banks in her district. Oh, my brain hurts. Now, Sanders and AOC are proposing an alternative to check cashing places, payday lenders, and checking account convenience fees. And what's that alternative? Turn the post office into banks. Sanders and AOC want to add banking services to the more than 31,000 retail post offices in the United States. Because the lines at the post office aren't long enough already. According to their plan, the USPS will provide affordable banking options like basic checking and savings accounts and check cashing. The American Postal Workers Union will never allow its members to go through additional training to become bank tellers, which means that the post office is actually going to have to hire tellers. The post office would also provide low-interest loans as an alternative to payday loans. So now the post office is going to have to hire loan officers and then create a debt collection division to track down customers who default on their loans. Now, the post office has been losing money for years. In 2018, it lost $3.9 billion, largely due to the cost of compensation and benefits for its workers and retirees. So let's see. Take the post office, which is drowning in personnel costs, and hire even more workers to perform services that will ultimately lose even more money? I love this idea! And on a personal note, the postal workers in my area are terrible at their job. For example, the other day I received a newsletter in the mail from my state assemblywoman. But instead of the postal employee delivering these newsletters to everyone in my building, By placing each individually addressed newsletter in each respective mailbox, the worker just dumped them all in mine. They can't even deliver mail properly, and you want me to entrust them with my money? Get real. Thanks for watching, sharing, and hitting that like button. And if you haven't already, subscribe to the channel. Check out the links in the description, and check out these videos that you may have missed. Thanks again for watching, and I hope to see you next time.